So, guys, first I would like to thank you for joining us in this episode. I would like to introduce you to the public. We have David, that is responsible for sales at AtonRa, and we have Joaquin, Mark, and Christoph that are in charge of portfolio management. AtonRa is a thematic equities fund based in Geneva. We have invested in them since their launch, and they are here to talk a little bit more about thematic investing. So, David, if you could do a short intro of what do you invest, what is Atonha?
Yes, with pleasure. So thank you again for having us as well. Maybe before we start about what is AtonRa today, a bit of history is always good. So AtonRa was created in 2004 by Stefano Rodella. At the time, we're only an independent research company on listed equities with a focus on thematic and growth investments. And to be more precise, in the tech, healthcare, and renewable energy sectors. So already back then, our approach to thematic was fundamental, industrial, and scientific with a long-term view. We used to sell that research to hedge funds, pension funds, banks, and so we've been doing it for roughly 10 years till 2014, where a client came to us and said that he could not buy our research anymore and asked us to implement it directly into a product. And so that's what we did. We implemented our own research to ourselves into a portfolio. And that's where the second life of AtonRa started. So he seed us back then with 5 million, and it was in one of our thematic, which is mobile payment. Today, we have been almost 7 years doing asset management, and we currently have 8 teams with the same common denominator, which is technology. Very important steps in the company were the regulation by the FEMA and also the launch of the UCIT fund that we've launched this year. Also, what I could say is that we're currently managing more than 1 billion, and we're very proud of our team and the progress that we've been doing for all those years. At the moment, we have 26 people in the company, and more than half are actually engineers, industrial engineers.
Yeah,
they're looking. Yeah, sorry.
From other asset managers that you have a team that knows the core of technology that you're researching.
Exactly. And the idea looking forward is to grow that specific team of scientific. In order to better understand the industry landscape in the future. Now, the second aspect, which is very important, or let's say the main one, would be the ecosystem of thematic investment. And the heart of the ecosystem is our investment approach. Maybe I can give you some, or I can explain you how do we do it.
Yeah, first, I think it would be nice if you guys could explain a little bit more about thematic investing, because here in Brazil, it's not a common thing. We have about 300 companies in our stock exchange, so there's not much room for thematic investing. So if you could go a little bit in that and explain us how different is AtonRa's approach from traditional active management in equity managers?
Yeah. So yeah, basically, if you look at the definition of thematic investing, first of all, it's about looking for opportunities created by macroeconomics, geopolitical, and technological trends that are structural and life-changing by nature. it's a whole new way for investors to capture powerful global trends that may drive future stock performance. But thematic investment is too often not well explained. So if I can sum it up, thematic investment is not a sector, a factor, geographic or industry classification. Instead, it's an approach that takes a long-term view of how trends can change prevailing business models and value chains, while allowing investors at the end of the day to get access and exposure to growth themes of the future. So that would be roughly the definition of thematic investment.
Nice.
Now, what makes us so different? Like I said, it's the investment approach. So first of all, the team itself, that will be the first step. So identify the team, the thematic, and that's, to be very honest, the most difficult part, because you have to, it's a very long process. You have to have a deep understanding, investigate a lot, search, question yourself. And for us, in order to actually select a team as a potential thematic, we have four main characteristics. The first one is we're looking at an addressable market large enough to have an impact on the world GDP for the 5 to 10 coming years. The second aspect is the team must have, I would say, an expected growth factor for at least 3 to 4 times the global GDP, which means on a regular year between 9 to 12% growth. The third aspect is the cyclicality. We cannot allow ourselves to be too focused in order basically to avoid the boom and bust, because that's very important. That's why we have a lot of teams, sub-teams as well, to avoid being stuck in one of them. And last but not least, which is the most important part, is the 3 phases that we look into a team itself. The first one is the infrastructure phase. The second one is the application phase. And the third one is the commercialization phase. So if I go back to the infrastructure, that would be, if I give you an example, the road that we're building, okay? Then then comes the application phase, and that will be the car that actually are on top of the road driving. And the last one, which is commercialization, and that will be us buying those services. So buying the car that will drive on top of the infrastructure. So basically, that's how we do the first step of identify a team.
Okay, interesting. Well, let's talk a little bit about your current view of the other guys are welcome to join, but the current view on global equities. Is there room for another rally next year? Looking forward, what should keep driving global stocks?
Yeah, so hi, thanks for having us. So I guess I can answer that question. So we are quite bullish on the equity market because we think we are in a very good setup actually. But I will first talk about equity markets in general and then more about what we're doing. Mm-hmm. The very first stuff is that we have zero interest rates that will last for at least 3 to 4 years. So that's a fact. We still have central bank purchasing assets, and that's another fact. And they are not saying they will stop. We also have the yield curve that is not inverted, meaning that we have the rates, the interest rate in the long term that is higher than the interest rate in the short term. And we still have a lot of cash in the economy, in the money market funds. The saving rates are at a historically high level. This is a very good setup for the equities to continue to rally. Now, obviously, if we look more in the macro perspective, we had, even before COVID, we had some kind of slowdown in growth. And that's the reason why you have if you can look at the Russell 2000, which is a US equity index that encompasses 2,000 companies, or if you look at the S&P, but on an equally weighted basis, you will observe that for the past 3 years, it has been more or less flat. But if you observe the NASDAQ, it grew by more than 80% in the last 3 years. So that means we are in an investing landscape where picking the right stock from the right trend is the good strategy. So we are in a good setup for equity to grow, but you will need to select the right one. So I guess we are shifting now from a passive investing type of structure that we had post 2008, 2009. But then since 2018, so that big 10-year rally, now we have to shift back into more active investing. And that's what we are doing here.
Okay, nice. I would like to talk a little about the big tech companies. We talked about FANGs in that last episode of our podcast. Facebook, Amazon, Apple, Microsoft, Google. You can include Netflix in that. Is it possible to outperform the market without investing in them? I know they're probably not on your target, but I want to know that. Is there a way to beat the market without investing in them?
Sure, I can take this question. Before answering whether we can outperform the market or not, I would just like to give a general view, what we have, our view on the stocks. So first of all, the FAMG, or I will call it MAGAF portfolio, last time I've checked, they've yielded 47% yield to date. And currently they represent approximately a quarter of S&P 500 market cap. So it's hard to ignore this fact, especially since no 5 companies have has held such a share of the index since, if I'm not mistaken, 1980s. So undoubtedly, this portfolio drives the broad market, and the pandemic has further pushed the investors to opt for these large companies benefiting from online businesses, cloud, etc. So owning these stocks is still a very good choice for investors. Of course, investors will have to make sure that they're avoiding performance chasing, and they're looking for growth outside this FAMG MAGAF portfolio. As the latter, they're starting to show up in many types of funds, even some value funds. So this can lead to a significant overweight in these stocks in the overall investor's portfolio. And I recall this proverb: water can lift the boat, but water can always also sink the boat. So it's not very easy to avoid MAGAFs. At AtonRa, across all our portfolios, we invest into 4 out of those 5 letters. But the cumulative weight is approximately 2%. Okay. And we are not investing in these stocks for their performance, but from the perspective of the long-term trends and other growth opportunities. The companies are gaining from global digitization. They're involved in developing the tech of the future. They're involved in AI, artificial intelligence, into robotics, into security, into fintech, everywhere. Plus, the companies have very good fundamentals and they're overall really good investments. Now, tackling your actual questions, whether it's possible to outperform or not, it's hard to beat the market without owning the stocks, but it's not impossible. Okay. Currently, it's not surprising to find funds that hold a quarter of their assets in Amazon or Apple. Nevertheless, I found the research that it studies around 10,000 funds tracked by Morningstar, and the research finds hundreds of funds that have no exposure to MAGAFs, but are outperforming the broad market on 1, 3, and 5 year basis. Besides the funds that have the actual ability to identify winning growth stocks, they have little or no exposure to MAGAFs at all, and they're consistently beating the market. So in AtonRa, we follow such an approach. We look for companies in emerging technologies such as cloud computing, software as a service, e-commerce, robotic surgery, etc. So the team, we favor companies that are earlier in their life cycle, as mentioned by David, in the infrastructure CapEx phase. So we take a very targeted approach to industries that stand to benefit from these long-term trends. And quite honestly, the approach proves that outperforming the broad market and MAGAFs is possible.
Okay, well, thanks, Mark. Going into that, what investment themes are better positioned in this current scenario?
In terms of particular themes, we believe that themes that are oriented to tech, healthcare, and energy are best positioned to profit in the current scenario. I think that was the question. Mm-hmm. But even though that if you're saying current scenario, we identified themes that would benefit pre-COVID, post-COVID, during COVID, and without COVID altogether, because we're focusing on long-term growth trends. In terms of valuation, we're not looking consistently on valuation. We are a growth firm. Of course, we recognize that there can be some sector rotations into value, into growth, but we focus on specific topics, trends that will not, that shouldn't suffer during those, let's say, rotations. And in terms of COVID and current situation, for our themes, the pandemic has just provided a boost to certain trends and adoption patterns, and even further boosted our thematics. And as always, we continue to monitor the current environment, the landscape for any further themes.
Yeah, you talked about healthcare, and we're hearing a lot about that during the U.S. elections. Is that having any impact in your theme study or your theme investment? Or what do you
just to complete your question, are you talking just about the U.S. election in general, or only healthcare and the U.S. election?
It's a theme that they are talking a lot about. They intend to reduce the cost of healthcare in the U.S. How do you expect that to affect your
Actually, it's a global desire to have, not only in the U.S. but
yes.
also in Europe, and I guess probably in Brazil too, to have reduced healthcare costs. Now, as you know, we are living a sanitary crisis, and what we have experienced this year with vaccines and treatments being almost approved after less than 1 year of research is just unique. It has never happened any time before. It usually takes between 7 to 10 years to develop a medicine. This year, they have accomplished that in less than 1 year. This is pure innovation, but innovation has a cost. It's very costly. You cannot, politicians can come and say, okay, we want to reduce drug pricing, it has to go down. But at the end, if you stop providing funding, or if you stop providing revenues to those pharma companies, innovation will also go down. And it's not in the interest of anyone in the world. Mm-hmm. So yes, of course, we are closely monitoring what Biden, what Trump, what anyone else is proposing. as measures to transform the healthcare systems. But we know that we won't have a revolution in this industry, in the sense that if we really change the entire system, it will be like biting the hand that feeds you, I would say. So so yes, no, healthcare is very important, has been very important, is going to be very important in the future. And we are still very, very positive about this industry. We actually have 3 portfolios, 3 themes covering this industry, not only on pure innovation like biotechnology, but also on themes like, okay, the world's aging today. How can we make sure that the people are not only going to be older, but are also going to live better while they get older? And those themes, no matter who's going to be the next president, no matter COVID or no COVID, those themes are here to stay.
Okay, I understand. Well, we talked about the current scenario. I want to know about your view in a world post-COVID. What companies, what themes should benefit from a world going back to normal? Is there a post-COVID theme that you're studying?
It's a tricky question because there is no a single post-COVID theme that should outperform the others, because in our opinion, so as David said before, we have 8 themes, but and our 8 themes are well positioned to capture the new world. As Mark said before, our themes are built no matter what the conditions the market is. Since we are looking for some long-term trends, COVID is not changing those long-term trends. But what we notice is that COVID has been accelerating some of the trends. If we focus on our technology bucket, so right now I can see you guys are all working from home. We came to the office to record this podcast, but we are also usually working from home. And working from home implies that we have to rely on cloud computing and on databases, on servers. And you need chips, you need computing power to make sure that those servers, this cloud is working properly. This is a huge topic of our artificial intelligence and robotics theme right now. If you work on your computer, it also means that you need to have a secure connection and secure software to be sure that what you're doing is working properly and safely. This is also a big theme, a big sub-theme of our security and space portfolio. And then finally, as people are stuck at home, we notice that they are more spending online. So e-commerce is on the rise. People are trusting less cash. There have been some studies saying that you can find traces of COVID-19 up to 28 days on bill notes. If you know that if you're a person at risk, you don't want to use cash to go to the shop next door. So you're going to use credit cards, you're going to use digital payments. And in this sense, fintech or mobile payments, 2 of our other strategies, could also benefit from it. I discussed already about healthcare, but we have another bucket, which is renewable energy, which will also benefit from this new paradigm, this new world post-COVID. For a while, we have noticed, I mean, I speak globally, there may be some local differences, but globally, we have noticed that people want to have a more sustainable world, more greener economies.
Yes,
and COVID-19.
Sorry to catch you, but I believe that's a trend that's starting in Brazil also. We have a lot of funds here starting ESG. So yeah, I believe that's really global.
It's definitely global. At first, it started with institutional investors, but the beauty of thematic investing is that since we are talking about trends and opportunities, everyone, even retail investors, anybody can understand those trends and why it makes sense to have such to build such portfolios. And regarding renewable energy, COVID-19 is a unique opportunity to accelerate the decarbonization of the world, going from oil to renewable energy. And all the recovery plans that have been announced so far, well, actually so far, especially in Europe, are giving huge packages to promote this industry. Our approach to renewable energy is more on the tech side. What we're doing in all our thematics is technology, and we believe this theme. This is a unique opportunity for investors to capture this huge trend, probably once in a lifetime trend, and to be positioned for the future.
Yeah.
So sorry
again. I read in your last investment letter, your investment recipes, and you said that the big oil companies are investing in electric vehicle charging. That was something I had no idea about. But the big ones are actually investing in that and changing their business.
If you look at the stock price of all those big oil companies, it has been going down and down and down. And what is happening right now is very, very powerful. Once you start to switch from this multi-billion, we're talking about hundreds of billion of revenues, and you go from a paradigm that was in place for decades to something new. It takes time, but it can also be very powerful and very quick. Once let's say once the can is thrown, you cannot stop it. Big oil companies, if they don't want, now they see those trends, and if they want to remain in activity, if they want to continue as a going concern, they must act. And so this is why we see all those investments into, you mentioned electric vehicles, but we can also discuss about offshore wind. We can discuss about many things where they are active and try to diversify their source of revenues.
Nice. Well, last but not least, I want to talk a little bit more of the benefits from thematic investing. How can investors approach thematic investing in their asset allocation? It's not something that we Brazilians are used to. So if you guys could talk a little bit more about that.
Okay, about asset allocation. We are not doing asset allocation, so it's always a tricky question for us. But the way we see asset allocation,
the discussion then.
Yeah, with pleasure. But the way we see asset allocation, or the old school asset allocation, where investors invest between 40 to 60% in equity, 40 to 60% in fixed income, we think is becoming outdated, in the sense that this is relying on some historical risk measures, historical returns. And when we see now that interest rates are near zero, are not going to go anytime up soon, and so we can discuss about if it makes sense to still having an exposure to fixed income. Then regarding the equity allocation, the way, and you had two questions about what differentiate has between a traditional value asset manager or a thematic investor. The way we build our portfolio is completely different from a traditional long-only fund that is going to invest only in the US, for example. First of all, we have a global approach where we're not looking for, okay, should we invest 50 or 60% in the US? We're looking for the company that has the technology that is going to revolutionize its industry, for example. We don't care where it is located. Then, while a traditional asset manager is going to look at some risk metric or some metrics like valuation metrics like price to earnings, price to sales, that kind of things, and is going to build a portfolio believing that, these stocks looks cheap compared to its peers. This is not our approach as well. We're looking more at the long-term trends that are about to change the world. So if an allocator, if an investor takes into consideration those long-term trends, thematic investing makes complete sense. Let me give just a very short example to illustrate this. We know that by 2025, so let's say in 4 to 5 years, the digital economy is going to account for about 25% of the global GDP. An investor should have, if he wants to match this 25% allocation, this 25% exposure to GDP, should have in his portfolio about 25% exposure to technology as well. Mm-hmm. And now, if you have a thematic approach, it's quite easy to use such products or such portfolios and to match this allocation needs. On the opposite, if you go into a traditional long-only fund, it will require much more work to know what is the exposure to technology and everything. Okay. So yeah, thank you.
Okay, yeah, that was a great example. Vini, do you want to join the discussion?
Yeah, I can contribute to that. And one more time, it's a pleasure to be here having this discussion with you, Bruno. I feel happy that this time I'm not the one that is answering the questions. I'm the one asking the questions. But as talking about asset allocation, and especially on the equity space, we call it here internally. There is the traditional way to run and have exposure to the equity markets. The traditional way, is the one that you've mentioned and David mentioned in the beginning of the call. Either you do your diversification based on geography, so you have an exposure to US, Europe, to Asia, and then you have your core and satellite exposure. Maybe you're gonna invest in the let's say the automobile industry in Germany. I don't want to invest in that right now, but maybe you want to have an exposure, or you can invest based in factors, as David also mentioned, and you can invest in value companies or quality or growth momentum. Our way to do it, we're shifting from the traditional asset allocation based on geography to more thematic, because what we believe is when we look at this world, which is globalized since and is becoming more and more, maybe less, let's see, globalized from the last financial crisis, and we look at the biggest companies, and we have touched this topic already in this conversation, the FANGs. I mean, the 5 biggest companies in the US are all that have some kind of technology involved, but where are their customers? I mean, the headquarters are in the US, but where are their clients? They're in the whole world, right? So why would I keep doing the allocations based on geography if the companies have their revenues coming from all around the world? So we have changed this approach, and now we're looking at themes and well, obviously it started with you guys, and I appreciate all of the conversations that we have through all of this partnership, and we became more and more convinced that the approach in themes would be more successful than continue with our traditional asset allocation. And more talking about technology, because what we look at when you go back to your books and etc., and you try to understand the GDP growth, right? And then you guys know that the GDP growth, you can split into 3 different factors. Labor productivity, you can have the increased labor, and then capital deepening, and then productivity. And we see for developed markets, I mean, we're not going to have a boom of population increasing. I understand the population of the world will continue increasing, but it's not that it's going to be substantial as compared to the less the last 100 years. So that's not something that is going to increase a lot. Then there's the second point, capital deepening, that it's the contribution to the GDP growth is decreasing with the capital deepening, not in emerging markets like Brazil that needs a lot of capital, but in developed markets, it's decreasing. So what it leaves us is the productivity that is translated to technology. So when we look at these 5 biggest companies, just because they're well known and everybody knows them, they increase the productivity of themselves as a company, but they also increase the productivity of all of the other companies. And for example, we're using this tool, the Zoom. They made a way that is simple that we do these conferences, and we don't have to travel. We can do this conferences in different locations, and then we increase our productivity. So this is our approach. But I would like to discuss and also ask you guys that you don't have a specific focus in any of the of countries or regions, but where are these companies? Where are this technology that the companies that invest and produce these new technologies, these global trends that we're going to see in the next year? Because from what I see, it's difficult to find a company here in Europe, isn't it?
No, for several reasons. It's if we look at our portfolios, it's mainly in the US.
Yeah.
And Europe, there are some maybe some social issues, or let's say some regulatory constraints. If you look at countries like Italy or France, where it's very difficult to hire smart people and to keep them, and a certain liberty of doing business, which is not optimal over there. As a result, you don't see those Facebook or Microsoft emerging in Europe. So US right now is probably the place to be, but keep an eye on Asia and especially on China, because despite the trade war between China and the US, China has to increase its independence, its technological independence, and we will not be surprised in the coming years. A new whole industry emerges from there, competing with the US players and the rest of the world.
So there's, from what I understand, then there's some regulations that may stop the rise of these new companies. Also a question of talents. So maybe there's a migration of talents to somewhere else. But it's interesting to see, and especially we had a case this year in Europe with one of the best companies, or it was supposed to be one of the best companies in Europe, especially in Germany, and and then what happened? It's just for us that are here in Europe, we look at, and then this translates also in the stock market, because when we compare the S&P and we compare with the Euro stocks for the last decade, it's Euro stocks is really falling behind.
Yeah, and each time we think, okay, now it's time for Europe to come back. Europe is going to results in Europe are going to come positive, or the governments are putting in place good reforms. And each time we think it's time for Europe to be the next region to outperform the global markets. It never lasts more than a few days or a few weeks. So there are some structural problems in Europe, and it takes time to reform things, to modify the things, and we don't think it's going to be any different anytime soon.
So what should we do, Christoph? We should just go away from Europe.
Well, no, but you had the answer. You had the right answer. Don't look at which place to invest. Don't look at the geographical exposure of your portfolios. Look at what is driving the world today, and so switch to this thematic investing, for example. Yeah. And if I may just add, sorry, I think the best things are explained with examples, and you can compare. It's hard, but as I said in my previous answer, it's not impossible to find good European companies, and there is a big potential to find those companies. And the best example, if you take a fintech theme, and there is, let's say, a subsector we call RegTech, which is regulatory companies helping with regulations, and we clearly see that US regulations are really different from European regulations. So there will be always a market for companies that help to automate regulations in Europe. We just need to find and identify those companies, but it's possible to find those companies, and they're overperforming the stocks market.
There's one really tricky question now, and maybe I'll give some moments for you guys to think about, because we obviously we see the themes that are going to be pushed forward, and the adoption is being accelerating. So it's just a matter of, and you guys know better than anybody else, that there's the technology advancing and the adoption of technology. And what I've been reading is that technology advanced so fast in an exponential curve, but then the adoption, it's slowly and slowly and slowly. And what I could see with the COVID-19 is just that the adoption has changed, and people are more willing to do this kind of conferences. They're more willing to do this type of calls and things that we never imagined doing, or maybe older generations never imagined doing. No, I'm not going to do that. I need to shake hands with the person I'm talking to and then close a deal. And now we're doing that. We're hiring, doing interviews online, and all of that stuff. So there are many trends that are happening and being incentivized. And as you said, e-commerce and all of that. But what theme that, or sub-theme that you guys invest in or you're looking at, that it's really having a push, and it's not on the media, that nobody's talking about it? I told you you need some moments to answer to this one.
That's a good question.
What do you think?
I'm looking at my colleagues if they don't have anything in mind, but is there something? The thing is, if something performs very well, if we see earnings going up and stock prices going up, sooner or later it also goes mainstream and it goes public and in the media. And if I think about, I don't know, solar energy, if I think about mobile payments, digital payments, computing power, telemedicine, everything has been well advertised in the media. Maybe the last one, telemedicine, is something that has been accelerated by COVID. So people don't go necessarily to the doctor if they are sick. First, they're going to have a phone call, a video call with the doctor, and see if they need to go to the hospital or to the doctor. This is maybe a more specialized sub-industry, but a lot of things, positive things, have been happening. So recently, like in the US, due to COVID-19, they have decided to reimburse lots of those telemedicine services, and this is going to stay. This is going to be made permanent. So this is not the Google of the world, but there are a lot of companies active in this sub-industry who have been booming this year so far. Yeah.
I will just add. I might just add something on top of that, and that actually your question shows how important it is to have the knowledge, and that's the reason why it's so important for us to have all those industrial engineers to try to understand all, like I said before, all the value chain. and all the catalysts and triggers towards a technology rather than another, and that what might disrupt something.
Mm-hmm. Now, I thought about one that I read on also in your letters, the brain-machine interfaces. I don't read about that anywhere, and you guys are investing in that type of thing. So if you can talk a little bit more about that.
Yes, sure. Actually, we just hire somebody with a neuroscience background.
Okay.
So we're going to write more and more about such topics. But a lot of things has been happening lately. You probably heard about the last company from Elon Musk, also active in this industry.
Yes. Facebook also,
and
right?
sorry.
Facebook is also investing in that.
Well, all the big tech companies are trying to are making research on the brain, on yeah, to try to improve our conditions in the future. But so no, this is maybe one of the topics, but this is not related to COVID. This is more a long-term trend, a long-term theme that we are currently searching and developing. Yeah.
Okay. Well,
So
please,
okay.
Vinicius.
Okay, sorry. So you guys said it's a long-term process to define a new theme and start doing it and start really investing on it. How many themes are you guys evaluating today, if you cannot say the names?
Right now we have 3 themes that we are working on, but it's already happened in the past that we have been looking for a theme for 1 year, and after the end of this process we decided not to launch it. So let's say that today we are working on 3 themes. We hope to find the right catalyst. We hope to find the right trends, opportunities to launch those themes. And if it happens, we will let you know very, very soon.
Okay, but these are 3 new teams, right? You guys invest in 8, if I'm correct.
That's correct. Yeah.
Yeah. Okay. Well, I had one last question. I see a lot of M&A activity in the companies you invest in. Is that something you consider before investing, or just something that happens because you're investing in technology or new technology?
Well, consolidation of industries has been around for a while, but it's probably been accelerated this year. Due to COVID-19, a lot of companies have increased their cash using revolver lines, issuing new debt, and they also notice that if they cannot go through a storm that we're living in alone, maybe to join forces is better. But for sure, for certain industries, very recently, especially in the semiconductor, for example, a lot of deals, a lot of M&A activities has been going on, and it should not stop anytime soon. Now, is it something that we consider? Yes, we do. Either we try to identify the targets of those companies, because as you know, there are quite often some nice premiums to cash in once a deal is announced. Yeah. So this is one side of the story. The other side of the story, since we are exposed to the market leaders, these are the companies that buy other firms. And in this sense, we're also exposed to those acquirers, I would say.
Okay. Vinicius, any more questions?
I could stay the whole day here and then trying to dig out information from these guys.
Yeah.
Because it's really important, this kind of conversations we have with AtonRa, because as all of our listeners know, we look at global markets and we do portfolios. So we manage portfolios for people, and it's impossible that we know everything about everything, right? So we rely on experts like AtonRa to first of all, that we delegate this part of thematic investments to them. And second, to be a source of information to know what is happening in the world, especially in technology. So I appreciate that. I appreciate our conversations and our collaboration.
Same for us. We're actually working together for many years, and we hope for many others.
Great. I'd like to thank you guys. It was a great to talk to you. It's always good to hear about new technology and new types of investing. So thanks a lot for your time.